Congratulations on buying your investment property. You now need to process it in Xero. I'm a property accountant, and over the years I've processed dozens of property purchases within Xero for my property investor clients. In this demonstration, I'm going to show you how you can add an investment property in Xero. Watch it now for a demonstration.
Click into reporting, balance sheet. Okay, we're going to click to today's date. What we can see is 2 property purchases have gone through, but clearly that's how much we've spent on them. So we've paid for the deposit, but that's not how much the property is worth. So the purchase price for that property hasn't been taken into consideration because it's only worked off the actual payment of the deposit. So what we're going to need to do is something called a manual journal to account for the actual purchase of those 2 properties. Otherwise, the balance sheet, which shows what the company owns and what it owes, is going to be understated. So yes, that's something we're going to do now. Firstly, in order to do that, we're going to make sure our settings are correct to enable us to do that. Yeah, so now we click under accounting, you can click under manual journals. What we're going to have to do is basically for every single property purchase, we're going to have to conduct a manual journal. And again, so if you have an accountant you work with, worth having to chat with them first. If they're kind of in Xero with you, then that can be easy because they might be able to help you with this. But if you're on your own, then this is your way you do it. So we're going to click on a new journal. And we're going to do Station Road first. So Station Road purchase. Key documents we're going to need to complete this. So firstly, then we're going to need a completion statement. Completion statement is a document which looks something a bit like this. It's basically provided by your solicitors. Basically looks like an invoice. It contains all the information of the purchase price and all of the associated purchase costs of the property. It's got details of the mortgage advance in there as well, and the amount of deposit you paid, including any payments on account. So this is going to be a required piece of information before we can process the property purchase. You're also going to need some information on your mortgage. So normally in a mortgage offer, you're going to have details about any it'd be easier to explain this. See how we have a mortgage advance here, 60,980. That's going to be basically the net mortgage advance. So your mortgage, your bank will basically lend you money for the purchase of the property, but they don't give the solicitor the full amount. So normally there's like a fee associated with arranging the mortgage, which is part of the gross loan, but they only provide the net loan to the solicitor. So we need to make sure we take into consideration this. This information is normally in your mortgage offer. I've just kind of summarized it for both. I've summarized it for both properties in here. So there's normally like an arrangement fee and a telegraphic transfer fee. So yeah, you'll need to account for these as well because they're not going to go into your. They won't be in your bank transaction, so they won't therefore go into your balance sheet. So what we're going to do then is, while we're on our manual journal, we're just going to open up another report as well. So we're going to click balance sheet. We're going to right click it and open a new tab. Okay, and click to today's date. And we're going to do Station Road first. So we're going to click in. See, it's got blue writing here, enables you to click into that accounting code. Okay, so make sure it's got all the information of your accounting period. Click update. Okay, it's got 2 transactions. They're actually in the wrong order, so actually you would have paid that first. So there'd be a payment account normally for money to enable the solicitor to start doing searches, and then there'd be a payment for the actual deposit itself. And if we just click back to the completion statement, we can see it refers to a payment on account, £300, and then a payment of just over £24,000. So that matches up with what's showing has come through into our bank details. A bit of a complication might be if you've paid for some of this from your personal account rather than your company account, but just to make things nice and simple, always just try to use your company bank account to pay for all of your company purchases. Going to keep things nice and simple. Okay, so we've checked those transactions are correct. What we're going to do now is start adding the details of the information into our manual journal. So the first thing is, and when was the date? So we check on the completion statement. Normally it'll give you a date of when the completion took place. We can see from here that it probably took place on the 1st of January 25, but normally the completion date will give you the the actual date. So we're going to put the date in here. So put Station Road purchase, and we said it was on the 1st of January 25. Okay, we're going to need to copy that description. We'll put Station Road purchase as per completion statement. And just copy that down. So normally, it's only because I edit it afterwards, it's not done it automatically, but normally it'll just do that automatically for you. Right, and so these are the accounts and transactions we need to process. The first one is going to be, and we'll add the information in here for each of them. The first one going to be is purchase price less what we have paid for solicitor. Okay, so basically, we're going to look for what in the completion statement as to what we've paid for the property. So it's purchase price less what we've already paid. And the accounting code we're going to use for that is going to be the relevant investment property accounting code. Again, I'm going to use Station Road property, and what we'll do now is we'll go into the completion statement. Okay, so we can see here that the purchase of the property was £84,000. We're going to deduct from that what we've already spent on it, and it's actually in the completion statement, but we've cross-referenced that with what's in the relevant accounting code for that property purchase. Okay, so we're going to go with £84,000. We're going to deduct from that 24,584.96, and also £300 that we've already spent. If we don't do that, if we put in the full purchase price into here and don't account for those amounts we've already spent on the property purchase, then we're going to basically be double accounting for it. It's going to mean that the property the property value of the balance sheet is going to be overstated, which is suboptimal. So what we'll do now is put that information in here. Because this is, so I haven't really got time to go into the detail of kind of accounting and bookkeeping basics, but you basically have debits and credits in accounting. And basically because this particular one is going to increase the value of an asset, it's counted as a debit. So we're going to add in that amount here. So it's the purchase price less what we've already spent on it. So the amount we paid as a deposit and the payment on account towards the solicitor. So it comes as 59,115.04. Okay, the next one we're going to add then, I'm just going to add a little customized bit of information. We just want to make it as nice and clear, so when we come back to it, it's really clear what we did. So we're going to go here, we're going to add purchase costs, capital purchase costs, and again using the same accounting code. I hate it when Xero does this. It tries to put in an amount, because basically with journals, debits have to equal credits, and it tries to it thinks the next one should equal that, but in this case it's wrong because that isn't the correct amount. So we're going to again link it to Station Road. And for this one, go back to the completion statement. We're going to basically go through and just add up all of the different associated purchase costs. These are all capital purchase costs, so it's costs of paying the solicitor for their fees, things like searches, things like stamp duty, land tax. You can see it's added them up for us in the completion statement. But one piece of advice is I would always go through and just double check they're added up correctly, because I find quite frequently with solicitors' completion statements is that actually the information is wrong. They don't always add it up correctly for whatever reason. So in this case, I have already checked it and I'm happy the information is correct, but yeah, always make sure yours is accurate. So I've just copied and pasted that directly from the completion statement and paste that in here. So that is all of the associated purchase costs, capital expenses, and basically they go to increase the value of the property on the balance sheet. They're not expenses which are deducted against rental income because of capital expenses. Okay, the next thing we need to do then is account for the mortgage which we use to purchase the property. So we can just add in details there, net mortgage advance. needs to be go under the relevant accounting code for the mortgage. So we added one before, Station Road Mortgage Finance. Then we're going to check on the completion statement what that amount is and put it in here. And you can see, we know we've done it correctly because everything adds up. Basically, all debits should need to correspond with credits. In this case, they do. So we could click post there and we'd be 90% correct. But as mentioned before, we need to account for the fees which were added to the balance of the mortgage. This is pretty common when you take out a mortgage. You pay fees which are added to the value of the mortgage. So we need to account for those as well. So what we're going to do is we would refer now to the mortgage offer. I haven't got a mortgage offer for this one, but I've just put the information in here. You can see there's a telegraphic transfer fee and an arrangement fee. So it comes to a total of 1,520. And there'll be two parts to this. So there'll be put mortgage fees added to loan. There'll be two parts. There'll be one part will go to the mortgage, another one will go to finance charges. This is an accounting code for cost to arrange finance. Okay, so again, adding in Station Road to the property for both of these. Okay, so there's two parts to it. There's the finance charges, which this is an allowable expense. So it's 1,520. And then there's this amount was added to the value of the loan, so 1,520. This stage, writing this for now, but whenever you when you look at a mortgage arrangement fees, just speak to your accountant and just see how they should be applied to your accounts. In this, we've said that they're applied all to the basically the year where you purchased the property. Speak to your accountant. They may have a way of actually this might not be the correct way when it comes to your accounts. So make sure you just inform them of this transaction. Now I'm going to click post. Okay, what we can do now is just to check that's worked. We can click on the balance sheet. So under reporting, balance sheet, day's date, update. You can see now Station Road investment property, it comes as 87,864.96 pence. So that's basically the amount. Oh yeah, we're clicking it actually. Yeah, so it's basically, it includes the payment on accounts to solicitor, the deposit we paid, and then it's the manual journals in here as well. So it's got all the purchase costs and things like stamp duty and everything from the journal we just made. And so that means the amount is now correct. If we just go back, we'll also see we've got now a mortgage amount as a liability as well. So you can see now that our for this property is correct.
Hopefully you found this video useful. If so, please remember to like and subscribe for further content. And if you enjoyed this video, then you'll love this next one, which is going to show you how you can set up tracking categories in your Xero account so you can separate the expenses and income for individual properties. Watch the video now.